the banks that you deal with a lot, they must be pretty happy with this administration at this point.
Well, I'll tell you, there was a recovery that was starting to build before the election, very slowly, and then it was accelerated with the election. And since the election, the Keefe Bank Index is up over 50%. The S&P is up 30%. So the banks have been outperforming, and I think there are a couple powerful forces behind that. There's operating leverage that's happening. We think there's going to be some regulatory reform, and the tax reform all mean a lot.
So the tax reform is helping a lot of corporations, including banks, as we just heard from the bank earnings out this week. But what about the regulatory relief? Because we've heard it hasn't really kicked in yet, but it's around the corner.
So there are two pieces to it. The first is what Congress is doing. I'm not sure if you've been following the Senate bill, but this is a bipartisan bill. Nice to see that there can be some bipartisan approaches still. And this bill is really, that's in the Senate right now, I think would be very helpful to the mid and smaller banks. Because remember, that regulation that came in to address the big bank issues did go all the way through the industry. So that could be quite powerful for those banks. I think the biggest banks are going to need the regulatory agencies, not Congress, to help them. And as you heard, there already is talk of possible relaxation from some of the rules that came in on some of the capital ratios, which could be helpful. But also, too, nobody's saying let's have no regulation. Mm-hmm. It's been roughly 8 years since Dodd-Frank was passed, and should we review it and find out what was too much? And I think that's the discussion that's happening now.
So fair point. And then to highlight that, take a look at the Bloomberg here. And this is the bank index for the S&P versus the KBW regional bank index. The regional bank index is the white line and has underperformed. Do you expect that? Can we play catch up here?
Well, I think the big banks are going to keep outperforming. This is material, and it's for a variety of reasons. And it's really operating leverage. For the first time in a while, revenues are growing faster than expenses. Plus, you get some share repurchase in there. I would expect that you're going to see double-digit earnings per share growth out of the nation's biggest banks for the next couple of years. And if you look at someone like Bank of America, which has been our top pick, they're currently earning around 11% return on tangible common equity. Our models show that going to 17% by 2019. That's a dramatic improvement, and we think these stocks have further to run. I think the regional banks will still continue to do well, but from a relative perspective, we think the biggest banks are probably best positioned at the moment.